Hello everyone, I hope you are doing fine. In this video, we will be discussing about the accounting entries for amalgamation. When we talk about the accounting entries, we are going to look at which account is going to be debited and which account is going to be credited and what is the net effect. So basically, for amalgamation in the nature of merger, the accounting entries will follow as when we transfer the assets and liabilities. Transfer of the assets and liabilities. We are here talking about the assets account gets debited and liabilities accounts to the liabilities accounts and the remaining amount to the transferor company. Okay, this is when we will be transferring the assets and liabilities at the time of transferring the assets and liabilities. Meanwhile, if we need to discharge the purchase consideration, for that the entries will be as follows. That will be the transferor company account. The transferor company is the company who is transferring. The transferor company account will get debited to equity share capital account to cash account if there is any cash applicable. Yeah, if there is any cash during in the transactions. So basically, when we are transferring the assets and the liabilities, the entry is as follows. For transferring of assets and liabilities, the assets account debit to the liabilities account to the transferor company, which will be the balancing figure. And yes, all these things will come at the book value. These things will come at the book value. Now, what is the book value? The book value is something which is already present in the balance sheet. So these transactions will follow the book value. That means these transactions will be as recorded as they are shown in the balance sheet of the company, of the particular company, not the market value or the net realizable value, but the book value. Okay. Now, this is for when we are talking about the nature of purchase. Sorry, for the nature of merger. Now we shall talk about the nature of purchase. Here we will talk about for amalgamation in the nature of purchase. What will be the entries if we are doing the amalgamation from the nature of purchase method? For that, first of all, we will transfer the assets and the liabilities as per the norm, that is transferring the assets and liabilities. For transferring the assets and the liabilities, the accounting entries will be as follows. That is the asset account debit, asset account debit to liabilities account, and if anything remaining, that will be to transferor company. But As you can see, these both entries are the same. Then what is the difference? The difference comes where in the nature of merger, we have to record the transactions at the book value. But in the case of the nature of purchase, we will record the transaction as per the market value or the net realizable value or the fair value. You can call it by many names. Not with the book value, but at the market value. Then what we'll do, we will discharge the purchase consideration. Then we will discharge the purchase consideration. For discharging the purchase consideration, the account is as follows. The accounting entries are as follows. That is a transferor company account debit to equity share capital, account, and to the cash account if applicable. So we will use that amount, we will use the assets and the liabilities by converting them into the shares. Then comes the third entry, that is the final entry, which is recognition of goodwill and capital reserve. Then we will talk about if there is any capital reserve or if there is any goodwill. In that case, we have to follow a different set of journal entries, which is as follows. Goodwill account debit is the goodwill account debit to capital reserve. Goodwill account will be debited to the capital reserve. So here, if purchase consideration is greater than the net assets. Net assets means these assets. These one assets. If the purchase consideration is greater than the net assets, then the balancing amount will come in the goodwill. Okay. However, if it is the vice versa, or I should say, if the purchase consideration is less than the net assets, then the balancing amount will be shown with the help of the capital reserve. If, for example, let us just take an example here. Okay, let me just define it and let us take an example. In the example, it is given that Asset Limited have the total net assets of rupees 40 lakhs. Okay, and the purchase consideration is as follows. The purchase consideration is as follows. So for the case number one, the purchase consideration is rupees 70 lakhs. And for the case 2, the purchase consideration is rupees 35 lakhs. However, for the last case, that is the case number 3, In the case of case number 3, the purchase consideration is rupees 40 lakhs. Now we need to pass the general entry. Okay. So in this case, let us just pass on the journal entries for the purchase consideration. So first of all, I will be talking about case number 1. Sorry, I'll be talking about case number 1. In this case, the entry is as follows. We have the total net assets of 40 lakhs and the purchase consideration is as follows. So assets account debit with how much amount? INR rupees 40 lakhs to purchase consideration. And the amount for the purchase consideration is rupees 70 lakhs, right? In the case 1. So the remaining balancing figure will be shown in the debit side as the goodwill. Goodwill account will be debited by rupees for 30 lakhs. That is the remaining balancing figure. Okay. And this is how the case 1 will conclude. Now, moving ahead to the case number 2. In the case number 2, we have got the purchase consideration as rupees 35 lakhs. That means assets account debit assets account will be debited with rupees 40 lakhs to purchase consideration. And the amount of the purchase consideration is rupees 35 lakhs. Now, in order to balance the journal entry, the remaining amount of rupees 5 lakhs will be shown in the capital reserve. Capital reserve account. Okay. And the remaining amount will be rupees 5 lakhs. So that is how the entire rupees 40 lakhs are shown. However, if we talk about the case number 3, here the assets account will be debited with rupees 40 lakhs to purchase consideration of rupees 40 lakhs. Why? Because in case 3, the amount of the purchase consideration is rupees 40 lakhs only. Here, there will be no contra entry, there will be no adjusting entry for the goodwill and the capital reserve, since all the assets are transferred on the par value with the purchase consideration. So basically, if the purchase consideration is sent as premium, now what do we conclude from here? Let us talk about the conclusion. What do we conclude from here? So our first observation or our first conclusion is that if the purchase consideration is taken over at premium over assets, then goodwill account, then the premium will be considered as goodwill. Okay. Secondly, if the purchase consideration is taken over at discount over the assets, then such discount will be shortfalled through capital reserve. And lastly, if the purchase consideration is taken over at par over the assets, then such value will have no effect. Okay. So we conclude that if the purchase consideration is taken over at premium, then it will be considered as the goodwill. If it is taken over at discount, then it will be shortfall through capital reserve. And if the consideration is taken over at par, it will have no effect on the journal entry. Okay. Now, I hope you have understood the journal entries. Let us just move ahead and talk about the disclosure required. Talking about the disclosure requirements, the names and the general nature of the business of the amalgamation when we are doing any amalgamations, we need to specify the names and what is the nature of their business. While doing the amalgamation, we need to disclose that. Then we also need to clarify the effective date of amalgamation for accounting purposes. Okay. Thirdly, the method of accounting that we are using to reflect the amalgamation. Either it is the nature of merger or either it is the nature of purchase. We need to specify that. We need to disclose that. Then particulars of the scheme sanctioned under a statute. Statute means any legal law. Then what is the scheme that has been sanctioned? What are the norms? What are the procedures that we need to disclose? Lastly, we need to disclose the description and the number of the shares that has been issued and the accounting treatment that we have used for the reserves. If we have created any reserves, then how we have created the reserves, what is the accounting treatment, that all should also be disclosed very finely in the disclosure. This was all about the how the amalgamation and how the journal entries for amalgamation works with a proper example. I hope you have understood the topic. Thank you so much.